What is up, Zinger Nation? Happy Monday, and it'd be a little bit of a happier Monday had the Lions pulled it out and won last night, but we'll discuss that. We've got a huge week when it comes to earnings. All your mega cap, or most of your mega cap tech stocks set to report this week. I'm talking Microsoft, Google, Apple, Amazon, Meta, you name it, they're reporting this week. So chances are your portfolio is going to depend on a lot of these earnings this week. We are going to discuss that. We have Sofi reporting this morning. Lots of news to get through, so let's go ahead and get the show started. I'll bring my man on, Dennis, when we come back. Joel is going to be out today and for the next couple days, so you're stuck with Dennis and I, but we'll keep good care of you. We got our man Joe Saluzzi from Themis Trading coming on at 8:35 Eastern, so make sure to stay tuned for Joe. Without further ado, let's roll that intro, and when we come back, I'll bring Dennis on, and we'll get to our first topics of the day.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, Dennis, let's get the sad news out of the way first. Of course, if you guys didn't tune in to the NFC Championship game last night, everything looked too good to be true. Perfect for Detroit and the Lions. The first half, they take a 17-point lead, go into halftime up 24-7. And I don't think scored again after that and let up 27 points. Well, actually, no, they did get the touchdown at the end to make it a 3-point game, but didn't end up mattering. Let up 27 unanswered points. And yeah, I mean, I was at a bar watching with friends here in Detroit, and you could just feel like the energy was so high. Everyone was on cloud nine. And then, before even the game, when like, the Lions still had like a 10-point lead, you could kind of feel the people at the bar were like starting to be like, oh no, is this really happening? Is this happening again? And yeah, I mean, all the momentum just completely.
We just couldn't get it back. We couldn't get the momentum back. Yes, there was some questionable calls by the coach, and the coach is going to be questioned hard in the D this morning. Obviously not taking the points when you got them. But let's be honest. Dan Campbell got him there by taking chances. And he's a chance taker. He's 4-2. He's going for it. He's 4-3. He's going for it. It's what he's done all year. So those kind of, calls got them to where they were. Those kind of calls, though, actually cost them in this game. So, I mean, and again, bad luck too, AB. I mean, you throw in the ball. We almost get the interception. It bounces off of his face, goes right to San Francisco receiver, and he goes, basically, and that's a touchdown basically right there. And then the fumble. I mean, that's pretty much the game. So, I mean, we gave up 14 points right there between the bad luck bouncing off the head and going right to the receiver and the fumble. That's 14 points. That's the game.
Yeah, and not to mention too the going for it on fourth down when the receiver Reynolds had a chance to make the catch and dropped it, which would have converted the first down, which then could lead to more points or at least hold off the 49ers from scoring again. So all these different plays, that you can go back and look at as game changers. The one call from Campbell that will be talked about is not taking the field goal there at the end. I actually don't hate that call to go for it for a number of reasons. Because first of all, your odds of getting the conversion on 4th and 2 is pretty high, around 50%. And, to kick a 48 or 50-yard field goal there, that's not like an automatic free point. It's not automatic.
Not automatic.
And if you miss it, then you're giving them the field, a better field position from where you kick the field goal. So, I don't hate that specific call, and it obviously looks a lot different if they convert it, but a lot of people will talk about that call. But like you mentioned, there were all these other plays in the game.
And the drop balls too, the chat's talking about it. The receivers could not make a catch in the second half. I mean, the touchdown at the end was a good catch, but multiple times, the couple of these balls are in the breadbasket, and the receivers just, are dropping the balls. So there was 3 separate plays on the 4 and 2. That one was a tougher catch, but it should have been caught, really. Like, the throw was a little bit low, but it should have been caught. And, that was a momentum killer right there. And there was multiple other times, too. I counted 3 drop balls on, that should have been caught. So it's not on Goff. Like, he had a good game. Like, Goff played pretty well.
Yeah.
Just the receivers were not catching the balls, and we had some bad luck, man.
And you got to give credit to the other team, too. I mean, Purdy and the 49ers played well in the second half. And, I mean, to come
They're
out
opportunistic.
Yeah, to come out like that. I mean, they could have easily just rolled over and said, "Oh, we lost this game after the first half." But yeah, I kind of similar to trading. I had some bets last night that were looking amazing, and I could have cashed them out for like a big profit, and instead I didn't and let them ride and ended up.
Did you bet on the Lions?
I did. So I took the Lions money line before the game and had a few different parlays. I actually had one with the Lions to win and Jameson Williams to score a touchdown, which that line was like pretty hefty because he's only scored, 4 or 5 times all year. So I was set to make a little pretty penny last night. It's not as bad financially. I know some people, Dennis, who actually bought Super Bowl tickets at halftime.
Really?
Yeah,
They
so
were
thousands of
jumping.
dollars. I mean, at least they'll be able to resell them.
They'll be able to sell those.
But the real winners in that is Ticketmaster and StubHub, who are going to get the fees from the first time they bought the tickets. Then once they resell them, they're going to get double fees on these tickets, probably thousands of dollars worth of fees. So, I mean, either way. I'm not upset about my bets as I am just about for the team and for the city, because it's almost worse having that lead and giving it away versus just like losing the game outright.
Well, it is. If we would have got blown out, we've been like, wow, we weren't going to win that game anyways, and it was a great season. But because we had such a lead at the half, because we were all counting our way to the Super Bowl, I mean, it was an awesome. At the half, who would have thought the Lions could be up 24-7 at the half? I mean, that's unbelievable. But, like you said, we had some bad luck, coupled with the receivers not catching, and we just already talked about it. So let's forget about it. It's a new day. It was a good season for the Lions. They're a good young team. It's disappointing ending, but it's hard to just go from the bottom to the top in one season. So maybe next year, we start, obviously, get there again and maybe a different result. So great season, Lions. Good for Detroit. Let's talk stocks.
Let's get into the stocks. All right. So first up this morning, you do have Sofi Technologies reporting. Dennis, and I know, are you in this stock, or you said you're trading a little bit?
I've got a position in it, which is a little bit on me because I put a position on ahead of the report to be long it because I like being stocks long ahead of the report. And for some reason, I thought it reported tonight. So sometimes you get lucky. Reason I like my calendar. I have it written down even on my sheet pre-market, but I had in my head that it was reporting, so I was going to actually sell. I figured maybe it runs up a little bit ahead of the report, which it really didn't. So anyways, I'm getting lucky here. So I probably am going to get out of this trade here today because this was on just for a trade. It wasn't on for a long-term investment. So I'll somewhat limit my comments here, but I'm getting lucky because the stock's popping on the report.
Yeah, and let me pull up those numbers real quick. I just got to wait for our Benzinga Pro to refresh real quick here. But SoFi, I mean, let's talk about the story real quick. This is one of those ones that if you look at it from the highs in 2021, I mean, took off with all these different other growth stocks and hasn't really seen, if we pull up the chart here, hasn't really gotten back. I'm on the 30-minute here. Let's go to the dailies. Has not even gotten back close to these highs of more than $20. And I know a lot of people that have been kind of buying it down here under $10, expecting for it to come back. And it hasn't really, but a good report this morning is sending the stock higher. You're seeing it trading up more than 12%. Here are those numbers now. We've got EPS, slight miss, it looks like, but revenue beats by 22 million. I assume the company offered some good. Okay, so 40% growth in members in products, revenue up across all sectors. So that's the thing with these growth stocks, Dennis, is you need to see the growth, right? If you're a growth stock like a social media company, Snapchat, etc., and you're not growing users, then the market's not going to, going to treat you like a growth stock. But once you can show that growth, it might not matter if you're burning a lot of money or all these other things, as long as you can sell the market on the fact that, hey, look, our user base is growing. Exactly. I mean, and we talked about this with Amazon last week, that Amazon always traded at this super high valuation, but was always growing users, and you always had the growth to kind of justify that valuation. So Sofi also gave some guidance that tops consensus estimates. So you're seeing a good stock on this pop, a good pop on the stock here today after the earnings. And I know you're kind of limited in what you're able to talk about it because you are in this stock. But when you see a movement like this, like if you were already in it, would this be something more that you would lean toward, like adding to your winners or selling the rip?
Again, so, and just, when I limit my conversations, when I intend to trade the stock today. So I'm intending to trade out of this. So that's why I try to limit my conversation. So I'm just going to just not say much about SoFi today.
All right,
it's in my long-term portfolio. Have at it. If I'm planning on holding it for the next year, I'll let you know. I'm buying some of my long-term portfolio, I'll let you know. But, the reason I bought this was to own it ahead of the report. I bought it like 3 days ago, ahead of the report for a trade. And I just screwed up. You're doing a lot of things, and I honestly thought it was reporting tonight. But I looked this weekend, so I actually saw it. I was like, I was on my sheet. I had it written down right. I just, for whatever reason, forgot about it and thought that it reported tonight. It's probably, I was thinking SMCI because my other stock reports tonight, SMCI. So my bad. Got lucky here. I'm basically just lucky because you can get beat up pretty good on those when you hold something through a report that you didn't intend to hold through the report. So I'm getting lucky on this one. And you know what? That's a conversation in itself. Like sometimes you get lucky and it's not really trading skills. It's just, like you didn't intend to do that, but you make money on it. That luck goes back and forth, so throw that into like the little piggy bank because I make a little bit of money on this one. This was luck. This wasn't skill. Because I did not intend to hold this through the report.
Well, look, sometimes, it's better to be lucky than good. And then the stock market is no different. I've had a few trades like that, Dennis, where, you get something wrong, but you end up being right in the long term. So
yeah, we'll give levels though. I can give a level,
yeah, here, let me pull up the chart on
like $9 is the gap down where you got the gap and you get into the gap fill area. So that's a natural point of resistance, I would think. To the chat's point, this is a retail loved stock. So it can get some love. It can get some going here. I do intend to get out of my position and sell here today, though.
Got it. All right. Well, we'll keep watching SoFi this morning and see how it's trading after this report. Again, strong report from SoFi, which has been struggling the past couple of years. Other top news today. Looking at defense stocks, Lockheed Martin, RTX. Over the weekend, we had some more escalation in the Middle East. An explosive drone strike in Jordan that took the lives of 3 U.S. service members and injured dozens more, including a lot of the people being treated right now for traumatic brain injuries. So a pretty serious strike, the biggest casualty event of U.S. soldiers from another force in like the past decade. So, you're seeing some of the defense stocks trading up this morning, and some volatility in the oil space as well. But either way, I mean, this is a sign that we might see more and more escalations in the Middle East. Biden and his team have already said there is going to be a response. Iran said it was not them. It was basically one of these kind of militia rebel groups. So not the government themselves of Iran or any of the Middle Eastern countries, but one of these kind of rebellion groups that's working on its own. So again, tragic news, sad news. And we'll probably see some more escalation in the Middle East. It'll probably get worse before it gets better in the short term.
Which is probably, if you want the trade, it's probably good for oil. And oil to me, has quietly bottomed. Everybody hated oil 3 weeks ago. It's breaking down, making new lows. Just as much as they loved it at 90, all the momentum traders, and said it was going to 100. When it got down, and looking, like it's obviously pulled back significantly here. But we're on the comeback trail. It looks to me like oil has bottomed. The oil stocks not participating nearly as much. I guess they are. ExxonMobil's come back the last 3 or 4 days. Occidental Petroleum's is quietly still in the Buffett buy zone area. So I think there's a point here where if you really believe in, there's going to be escalation in the Middle East, owning these oil stocks and these defense stocks is maybe not a bad call. The value is here too, AB. I mean, some of these stocks are trading at pretty low multiples. RTX has its own problems. We know we've talked about those in the past. But, you've obviously got Lockheed Martin got beat up on its earnings report. Maybe it can stabilize. NOC, General Dynamics, they're all beat up. General Dynamics actually went in the opposite direction. But what about just oil here? I mean, I'll get your thoughts here too. I feel like some of these oil stocks are trading with P's of like 8, 9, 10. Again, they're cyclical. Again, those earnings aren't always as stable as, some of these other companies are. But, a Chevron's got the buyback in place. It's got the huge support at 140, up here at 149. You know what? And EVs, are coming eventually here, but they're not coming anytime soon. We're not all going and turning over and buying, expensive electric vehicles here anytime soon, especially with the big three backing off on EV investments here. It's telling me that the gas guzzling cars are still here for quite a while. So, you know what? Oil stocks, I kind of like them here.
Yeah, I mean, nothing in the market is usually binary or black and white, but for these oil stocks, I almost kind of feel like it is. And it's basically comes down to, do you think there's going to be a global slowdown in the economy? Do you think there's going to be a global recession? If you think yes, then maybe not, because demand will continue to fall for these oil names. I mean, on the flip side, you could say, oh, well, in a recession, these value stocks are going to hold up better than, your growth in tech stocks, which may be true, but typically in times of recession, you can look back at the USO chart and see what it does, and it's usually not great. On the flip side, if you think no, I think the economy, the US economy is going to be fine and the global economy is going to be fine, then I would want to be long these stocks, because like you said, the valuations are good. As long as the demand stays there for oil, then there's no reason why Chevron, Exxon won't report good earnings and won't make a lot of money. I mean, we just had this ruling last week from the Biden administration that's going to stop new exports of LNG. And so I think you're seeing a lot of kind of this transitional or clean energy stuff be, maybe show signs of promise, but not really viable right now to meet the energy demand of the world. So what do you have left? You've got oil. And so again, if the economy is going to stay strong, if the global economy is going to stay strong, then I think all these oil stocks will benefit from that. And I think probably the market has priced in at least some sort of downturns. Then if you don't get that downturn, but it's already priced in, then that could be a bullish catalyst for these stocks. So,
It needs to get the momentum going again. The value is there. The story is bad, and that's what keeps a lot of people out of oil, because you've got the Kathy Woods out there saying nobody's going to be buying gas guzzling cars 5 years from now. And that might be the case, but it isn't this year, and it's not next year. And we've talked about the consumer not having the money for the big ticket stuff. And you can see it in the EV makers. I mean, that's another trade in itself. I mean, they continue to struggle. Like, look at Lucid Motors. It's $2.65, $2.74 here today. I mean, Saudi's behind that. That looks like it's going out of business. Fisker looks like it's going out of business. I mean, the trade in the EVs, all my, those lithium stocks I had are terrible as well. I mean, anything EV has really been terrible. Tesla's the only one that's held up. And now Tesla's, showing weakness too after their last report. The wild card with Tesla is the humanoid aspect. You obviously have them working on that. That is going to be a revenue source for them eventually. So that's the wild card there. But you got to say, like I kind of said, I liked Rivian, but that looks like, not good either. It's been leaking since I was talking about, I think it was 17, and it's continued to leak down here too. I mean, the EV trade is ugly. And if the EV trade is ugly, eventually you got to almost think like maybe it's good for your traditional auto, like, and I'm not saying buying foreign GM, but all those oil stocks are trading at P's of 8 and 9 because we're not going to be using, as much oil 5 years from now. I don't know if that's the case.
Yeah, I mean, these you almost kind of feel for these like EV companies like Fisker and Rivian, because they had their whole business model basically established in a zero interest rate policy, and then those interest rates get jacked up, and like you almost wonder, like, would Tesla be in the same situation had they been 5 years later, 10 years later in this kind of same boat, but because they got that growth earlier, now they're established, now they can kind of withstand the interest rate hikes a little bit more. But I mean, I still for Rivian, like I think if for me, like I still kind of want to buy a few shares just to hold long term, knowing okay, this might, be going to zero or might get bought out or
Yeah,
something, but like
speculative.
a speculative bet because I think if it does work out in the long term, that Rivian's product is actually like I see Rivian trucks on the road here in Detroit and I think they look pretty cool. I know
They
how
look
much
awesome.
I know how much Americans love pickup trucks, so as long as you're able to like make a good one and I don't think people really care that much if it's electric or gas powered, as long as it has all the same capabilities. You can still tow the same amount, and you can do all these other things with it. So I don't hate necessarily Rivian as like a speculative pick here, but you got to realize just hey, these things aren't in favor. Going back to Tesla real quick because you
Yeah,
mentioned the humanoid.
yeah,
I mean, my thing with that, Dennis, would just be with this company's track record of timelines and missing timeline. I don't even know
yeah.
when they say that the humanoid's going to be out, but they say, oh, it's going to be on the market next year in 2025. That probably means something more like 2028 for Tesla and Elon Musk,
Yeah,
given
and the
its track
rumors and the
record.
talk, they've never. I don't know if they've actually given a timeline, but it's 2027 is what I've heard. To try to actually start putting these into production and start to like actually get revenue from the humanoid. So that's 3 years. That's a long time to wait. The story is cool. I mean, again, if they're not the only ones doing this, the stuff going on at Boston Dynamics is incredible as well. So I mean, they got Tesla and Boston Dynamics, I believe, leading the charge here, and other companies, smaller ones too. The one thing Tesla's got is just a pile of money. So they can keep throwing a lot of money at this. And I do think this humanoid aspect is a reason I would want to eventually own the stock. The problem is at the current valuation and the earnings not growing and like at least not growing like they were, it's hard to get behind Tesla. What is the PE right now? Let's go to our trusty Benzinga Pro and look it up. I think
Let's
it's like
see.
60 times earnings. It might be
Overview.
more than that.
Yep, 60 forward PE of about 55 and a half. So
Yeah, so you're paying twice as much for Tesla as you are for Nvidia on a forward multiple. I mean, that's a tough sell. If this thing, got back down to 140, I'm not saying it's going there, I'm not saying that at all, then it starts to get more attractive. You get Tesla under a PE of 40, then you start thinking, well, I'm getting the humanoids. EVs aren't going away. They're still the leader there. Or they found a way. I mean, that gets more attractive. But you're paying 55 times forward earnings. I just think, and again, I'm in this year where I've got the bias already that big ticket stuff is not going to get bought as much. And Tesla is a big ticket item. So I'm not a big fan of owning automakers right now. So I want to own humanoids, but 3-4 years out here, AB, to your point, is a long time. Maybe I want to own Tesla like a year from now. So I know it's a long time to wait, but does the story get hot? Do they start talking about it more? Does that carry it? Like Chris Camillo over at Dumb Money is like all in. He's all in on Tesla, saying the humanoids are going to change the world, and this is going to be the most valuable company in the world. And maybe that's the case. I respect Chris very much. He's been on our show multiple times. He's smart. So and I was I'm with them on the story aspect of it, but their core business right now is not doing that well. So until we get closer to this, humanoid production, it's hard to just say, yeah, let's go buy Tesla here today because this is humanoids are going to change the world here. They're not changing the world tomorrow, though. I don't want to be too early here.
yeah, and I mean that's one of the biggest things is you can be exactly right, right? Chris Camillo can be exactly right in his call on the humanoids, but be early. And I mean, being early is in trading or investing a lot of times the same thing as being wrong. I mean,
It is.
my favorite example of that is when people talk about, oh, if you would have bought an Apple in 1985, you would have sold it 10 years later for an 80% loss, right? Because most people aren't going to withstand that 80% downturn like you would have if had you bought Apple in 1985 and then
96% down in Amazon.
right.
Amazon went down 96%. That's tough to hold. That's tough
And
to hold through that.
yeah, and I mean, we talked about it too with Kathy Wood. I mean, Kathy Wood was probably like one of the first prominent people in investing talking about the AI trade and talking about how transformative AI was going to be. And yet her, calls on it and trades on it haven't really worked out that well for her. So again, like it's you can have this story of the humanoids of Tesla and it all work out perfectly. But if you buy the stock today and it goes down another 50% before then as good as your story and predictions were, then the trades sometimes don't match up.
Yeah.
So
Yeah.
I'd want to wait and get more clarity on this. I mean, I do got to give Tesla credit. I didn't think the Cybertruck was even coming this year, so at least they did deliver on that. But again, probably 2 years after it was like first
It's the
initially.
timelines. He eventually delivers, but it's
Right.
the timelines. It's the
It's
timelines. And don't forget, he's fighting with the Tesla board right now. He wants more ownership of the company. There's other issues going on here too. So lots of things to think about. I don't think Tesla's just turning around and, maybe it is. Maybe I'm wrong. Maybe the humanoid, is going to, obviously, the story's going to get hotter sooner. But, if people start talking about it sooner, I think you're going to still get a chance. And again, I don't want to be early. Brian Shannon talks about it all the time, not buying stocks in downtrends. I mean, this stock is in a clear downtrend here right now. This stock is massively underperformed. I mean, Kramer's throwing it out of the Magnificent Seven. So there's a lot of issues here with Tesla. I don't think I need to be a hero here. I think I'm going to still get a chance to get in. I don't think it's taken off without me.
Yeah, and I mean, the thing, like we said with the timeline, it's almost like they've missed so many timelines and stuff that the market doesn't even like punish Tesla anymore for it, right? If you're the CEO of a lot of other companies, right? If Ford's CEO says, "Hey, we're gonna put this car out by this date," and then they don't, I feel like the market punishes it. Whereas when that happens now with Tesla, the market's just like, "Oh yeah, well." That was expected. It's almost like they've done it now so many times that it's just kind of baked in and priced in. So, all right. Well, moving on from Tesla, we did mention that this week will be probably the biggest make or break week so far in the market this year. I mean,
This is the week. This is the earnings week.
You have every major tech company reporting that
Yep.
hasn't already reported pretty much.
Yep.
Maybe outside of NVIDIA, which usually reports later, but you have Apple set to report. And let me get the exact days up so I don't mess it up. Okay, so let's go in order here. So
you got an earnings calendar? Benzinga will have an earnings calendar.
Yeah, I've got. Yeah, I'll show the earnings calendar. Let's actually.
Yeah, bring up the earnings calendar and we can
idea.
talk about it. But my whole portfolio, like I said, is under attack this week. I basically have half my portfolio reporting, and maybe that's everybody's portfolio. But there's your earnings calendar here. I mean, Sofi, we've already talked about this morning, but tonight, SMCI, which I'm intending to hold through the report. I mean, that's run so far, but again, they already raised guidance, so we kind of know the report here, so hopefully it can hold up. Nucor reporting tonight, which is a Kramer darling. That's pretty much the bulk of the excitement. Whirlpool, FFIV, there's a few there, but tomorrow is when we really get started. Microsoft, Google, AMD, Starbucks is reporting. Wednesday's Qualcomm, MasterCard, Boeing will be interesting to hear what they have to say. Thursday, holy mackerel, Katie barred the door on Thursday. Apple, Amazon, Meta reporting. We even got Merck over there, Honeywell. I mean, the names reporting here, RCL, Microchip. So many companies reporting. Microchip's already warned, I believe. And then Friday, we get the oil giants, ExxonMobil and Chevron. What a week. It's going to be exciting. It's going to be market moving because these companies are obviously weighed so heavily in the S&P. I mean, I'm excited, really, obviously, to see Microsoft tomorrow night. That's going to be your big, first big gun, reporting. Again, we've heard from Netflix and Tesla, but this isn't, the $3 trillion mammoth of Microsoft. What do they have to say?
Yeah, and we've talked about this when it comes to earnings, but it's to me a lot of times less about the actual numbers themselves and more about the expectations going in. And then the reaction, because it's not going to be good enough, I don't think, for Microsoft to just report good numbers in line with expectations. The expectation now from the street has been for Microsoft because of its holdings in Open AI and what it's doing with the AI things in Microsoft Office and its cloud growth. I mean, people are expecting huge things from Microsoft. So even the slightest miss, I mean, the numbers Microsoft could report in terms of billions of dollars in revenue and still growth, but if they don't hit it out of the park, I could see Microsoft trading down, which could scare off kind of investors from the rest of the tech. So I'd be kind of wary of Microsoft going into this just because, again, the bar is set so high. I mean, do you think there's a chance, Dennis, the bar is set too high?
Expectations are very high for all of these companies. Like everyone that's reporting here, even starting with SMCI tonight because they raised guidance, but we kind of know that report because they kind of already did the preliminary numbers. But Microsoft's bar is high, AMD's bar is high, Google bar will probably be high, maybe not as high as Microsoft. Apple bar, it's come back quite a bit. Amazon's trading near 52-week highs. Meta just continues to run. It's basically going off, not even far from all-time highs anymore. Meta is an all-time high. Holy cow, I did not realize Meta. What a comeback story for Zuck. I mean, the stock Meta was trading at $384 in 2021, went down under $100 to 88 bucks, and a year and a half later gets it all back. You just can't bet against these mammoth companies there. And if you were in 2022 in October and just saying, look, it's gone, to a point where even if this recession happens, it may not be that bad. I mean, if you were just loading up at the end of 2022 in tech, you just killed it in 2023, and you're continuing to kill it in 2024. Wow, I guess just buying tech on dips, it just works.
Well, yeah, and with Meta, I mentioned this with Sofi that like if you're a growth stock, you have to show that you're growing. And when Meta's big downturn started is when they stopped adding you. I mean, like they didn't add any users on a quarter-over-quarter basis for its first time ever as a company. Like not like net. They added some Instagram users, but like no new Facebook users, all this stuff. And then the stock started getting hammered. I mean, you had slowing growth on top of rising interest rates, overall tech becoming out of favor. So the stock dropped like 60, 70%, like you mentioned, from 385 down to below $100 at one point. But then once it gets down here,
PE was under 12 or something.
I know. Once it gets down here and you're looking at how much money, growth aside, whether they're adding new users or not, how much money it's bringing in each quarter from ad revenue, from all these different things, then you're like, wait a second, growth or no growth, this thing has value, and this thing is like a value stock down here. So the story changed from, okay, this is like your growthy or your growth techie stock, to, hey, this is a value stock. And then once people started buying the stock, then growth came back for it. So now you have this kind of double whammy, and now it's back up to, like you said, new all-time highs, nearly $400 a share. And then a lot of this too has been driven by the AI story. So, I mean, it just goes to show you that like, it might feel like it on the way down that, okay, this company, I mean, so many people are writing the obituary for Facebook and for Meta on the way down and basically saying this company is dead. This is dead. And
that's what they do. That's what media does.
Yeah. I mean,
they sell Barron's.
It's transitory.
Barron's was the classic, back when Facebook came out and, it went down to, $21, and they put that price target with a thumbs down on the Facebook like this, and they put the price target of $15 on it. That was the absolute bottom, the Barron's low, and stock's $394 here now. So, I mean, this is what media does. It sells, it gets super bearish at the bottoms, super bullish at the tops. And, sometimes it's those crowded trades, that's where you've got to say, hey, sometimes from a valuation perspective, things have run too far and you got to ring the register, or sometimes from a valuation perspective, things have gotten too cheap and you just got to buy. But, really long-term investing at the core is still like buying good companies at reasonable valuations. That's the core. Tesla at 55 times earnings just doesn't feel reasonable to me. It's a great company though. So, I mean, that's what I think you've got to do is, when you get these inevitable pullbacks, which we do get, feel out, look at your forward multiples. Don't get trapped by current multiples. You got to look at where projections are going, where we're going to, not where we're coming from. Think about Wayne Gretzky, when he played hockey all those years. He wasn't going to where the puck was at. He's going to where the puck is going. So always think about, where these companies are going. So that's why I say looking at trailing earnings is just a terrible thing to look at. That's what media does. AMD's trading 1,400 times earnings, because they made 1 cent last quarter and they extrapolate that out. It's ridiculous, that's a fact. It's correct, but that's not really where the company is being valued here right now, because we know their earnings are going up. The PE, current PE is 1,600 times, not even 1,400. It's 1,600 times, but the forward PE is 46. So, I mean, that's where we're going here. And we know, they're growing those earnings, and we know the last quarter was, obviously weak, and that's why those numbers look like that. So when you're looking at from a valuation perspective, don't get caught up on trailing earnings.
Yeah, and whoever in the chat was saying, Chris was saying, sounds like you're talking about Tesla. I mean, maybe that, Tesla gets down to a point where, like Meta, you're looking at it and saying, hey, this is a value stock, but you can't make that argument yet. And I think we're a ways away from there. Dennis, we've got our guests hanging out backstage, but before we get there, just because you mentioned the great one, Mr. Gretzky, I gotta take this opportunity to share my favorite Gretzky stat. You might know you're a big hockey guy, so you might
I'm a
know
big
this
Oilers
stat.
fan too, so
You
yeah.
might the stat I'm gonna go
I
with.
might. There's a lot of Gretzky stats.
There's a
What do you got
lot of
for me?
great Gretzky stats, but this one
59 records.
I think is up there with probably the most crazy sports stats of all time. But if you took away every single goal that Wayne Gretzky ever scored in the NHL, he would still be the all-time points leaders, which means he has more assists than the next person has goals plus assists. So in hockey, you get a point for either scoring a goal or for assisting a goal. Gretzky has more assists than the next person has goals and assists. Just an absolutely insane stat. Not to mention,
nobody dominated their sport more than Gretzky did back in the 80s. I mean,
yeah.
you could, Michael Jordan, you could argue too. Michael Jordan, Wayne Gretzky, and even Tiger Woods back in his day. There's always been those dominant, but Wayne Gretzky was just an unbelievable player.
Yeah, I mean, the fact that the league has 99 retired across the board, like you have Jackie Robinson's number retired in baseball for like the sentimental value and all this, but the fact that his jersey number is retired just because he was that good, just like, no one's ever going to play with a 99 jersey in the NHL ever again because he was that good. It's just absolutely insane. But all right, we've got our guests hanging out backstage, my man, Joe Saluzzi from Themis Trading. Without further ado, let's give Joe our special Zinger Nation welcome. When we come back, we'll be talking. We'll see what Joe's been watching. All right, Joe, happy Monday. How you doing?
Good morning, gentlemen. Sorry about the game, Dennis.
I know. We're trying not to talk. We talked off the hop, and now I'm going to try to forget about it all day. But it's there in the back of your mind.
Yeah.
The possibilities of the Lions in the Super Bowl. Just thinking about that.
We were all rooting for you here. Everybody.
I know you guys were. Yeah, I know. And you know what? It was a hell of a game. Like I've said, the Lions. I feel like we were there. Halftime, it was good. San Francisco really didn't win. The Lions lost. We just had so many mistakes there.
They did.
So it is what it is. Yep. It was a good season. I'm trying to look at the silver lining here. It's hard though the day after you get bumped.
It's tough. Sports is tough.
Isn't it?
As a Mets fan, I know your pain.
You do, Joe. How's it going?
We're doing great. Yeah. Things are staying busy, right? Watching the markets and the market structure as always.
Well, before we go to market structure talk, let's just get the feel of your institutional customers here. Like, obviously, you trade for a lot of big companies, and what are they saying out there? I mean, this market has been relentless to the upside, at least from in the tech stocks. Is it still like your customers looking to buy tech? Are they, looking to diversify and buy other things now? What's the institutional customer saying out here?
Yeah, we have a mixed bag. Obviously, we're agency traders, so we trade for all different types, and we're buying and selling and shorting and doing everything throughout. But, it feels like it's been a little quieter at the beginning of the year. It seemed we didn't have that volume. The volumes are definitely lighter starting the year. So I think maybe people are waiting to see, because I think there's a lot of numbers coming out. There's a lot of information, even just this week alone, between earnings from all those big tech companies. We got the Fed, obviously, on Wednesday. And you have unemployment on Friday. So that will give them a much better direction, I think. So by the end of the week, end of the month, I think you're going to get a better feel for folks and see, hey, will this rally continue, or are we set for a pullback, first quarter of the year? And I think a lot of people were anticipating this pullback, which we didn't see, right? So now people are like, oh, wow, what happened to the pullback? I thought we were getting one. So, but I think, again, by the end of the week, you're going to get some more clarity on these things, and I think we'll go from there.
So moving into the market structure conversation, I mean, where do you want to go with this? We've talked for years. I've known Joe for a better part of 14 years here now, and we've been talking market structure for a very long time. It's funny, we've been talking about changing, talking about this, but the market structure, we've had slight changes, but really it's kind of just stays the same. I mean, obviously, we've talked off exchange trading, which has grown here over the years. When me and you started talking back in 2010, it was about 35% of the market. Now it's almost half the market, continues to grow. I mean, at what point in time, maybe we could just start there. At what point in time is the equity market just going too dark?
one big giant dark pool. We won't know what's
That's
going
what
on.
it feels like sometimes.
Yeah, we're heading in that direction. But yeah, people, and the reason, there's a number of reasons why we trade in the dark as institutional traders. My number one reason is I'm trying to cloak my clients' intentions. I don't want people knowing that I'm out there, obviously. But even when you're in the dark, that people will spot you, they'll ping you with odd lots, they'll do all sorts of things to find out where the action is. So it's, I think what happened was the lit exchanges, the big ones, the major ones, New York, NASDAQ, SIBO, they started, selling things other than their business is not trading. Their business is selling data. So when they do that, they give away intentions. They give away my information as a trader. For instance, on retail trade, perfect example. If a retail trade, if you want to post a limit order to an exchange, it's going to post and it's going to have a little indicator on the data feed saying that you're retail. And that means a lot to the HFTs or the world and to the prop traders because they know it's not institutional or us. So the market structure has always had these issues buried deep inside of them. And our goal as institutional traders is to make sure we don't get caught up in those tricks and those pitfalls that are out there all day long. But to your point, really not much has changed lately. The ton of dark pool volume is still there, almost half. There was market structure rules that were proposed last year by the Fed. I'm sorry, by the SEC, and we're still waiting for approval on that. And there's a big fight going on that. So I think it's going to be a while before we see anything. So bottom line is,
what do you think of Gensler? I think his intentions are good here. Obviously, we got the big, and a lot of, people probably who are very conflicted saying, oh, Gensler's trying to fix problems that the market doesn't have and all that stuff here. But I feel like he's in the right place. I feel like he's looking in the right place. His proposals, some of them I had some issues with, but at the same time, I think he's trying to do the right thing here. What do you think of Gensler?
Yeah, I up until recently, and I'll tell you why in a second, I was a big fan. Recently, I kind of took a turn the other way. But I think his only problem, or his problem now, he proposed so much, and there's a lot out there still pending, and he's running into the machine or the industry, as we call it, the Wall Street machine and crypto machine that are going to fight him in the courts. And the unlimited amount of money, they'll wear out his term. He'll be gone by the time these lawyers are still suing. So I think by doing too much, he actually hurt himself, where he should have just focused on certain ones, cherry pick the big ones, which is most of the chairmen do before him. The SEC knows they can't do everything, but Gary had a very ambitious agenda. And I think you saw that when he caved on the crypto ETF. And Gary Gensler alone had the say in approving a crypto ETF because the vote was 3-2. Right, he could have went the other way, and the vote would have went against it. But he, obviously over the years, the crypto industry has kind of hated him for doing this. He was doing the right thing, in my opinion. He did the right thing until the end when he yielded to the industry and he yielded to the political pressure that was coming on him from all sorts of congressmen who get donations from the crypto lobby. Okay, let's be real here. This is what's going on. And the saddest part about it are the bag holders, which are the crypto folks, because the Wall Street machine, the BlackRocks of the world, they're going to make a ton of money. They're out there laughing, yucking it all up. While the regular folks, how's crypto doing since the ETF came in? Was it down 20%?
It was the topping event, really.
Come on, man. So I was disappointed that Gary caved on that. I thought he should have held the line. He had, there was some legal issues with some of the court rulings. And the biggest mistake they made was approving a Bitcoin futures ETF. That set precedent for this. But anyway, so back to your question. I liked him up until that.
So Joe, I mean, you mentioned that you think Gary Gensler and the SEC kind of caved to pressure to approve these, but what do you think the actual downside is to these ETFs being approved now that they're out on the market and BlackRock and Grayscale, whoever are offering them? What's the downside to them being out there?
Right. Now, before I answer, I'll tell you, listen, I don't have a problem with crypto in general. I think if you want to trade crypto and you've got a Coinbase account or wherever, and you put it on your hard wallet and you do, fine. There is absolutely, you can do whatever you want with your money. Nobody wants to change that. But when you wrap it in an ETF wrapper with the gold seal of approval now of the SEC, you've now put an enormous amount of risk on, because what's going to happen is they're going to be advisors out there telling folks that they need 5% crypto in their portfolio, and long-term investors are going to say, I want crypto, especially when it starts to run up again. And I think the problem, which never got solved, is that the surveillance and the underlying crypto markets has never been, there is none, basically, okay? There's still continued, there's fraud, there's wash trading, there's all sorts of things going on in the underlying. And what the SEC had said for many years was, until we get a cross-market surveillance system, we're not approving you. They didn't get a cross-market surveillance system, and they approved them anyway. So if you put a surveillance system on the underlying, then I don't have a problem. But right now, you don't have one.
Yeah, that's just it. You have so many, shady players here that we don't even know in other countries. So much happening. And then it's not just about Bitcoin as well. I mean, it's about so many of these other coins, thousands of them out there. Basically, people just, creating something from nothing and then selling it and putting, and taking good money in from it. I mean, I don't know how you stop that. But that's the bigger issue. I think it's not so much even with Bitcoin. It's just all these little crappy coins that a lot of people lost all of their money in, and they're still creating these, and there's still no surveillance and no regulatory to stop them from just creating something from nothing and then selling it to innocent people.
Right. And now you've opened up the door to all sorts of shenanigans like that. But look at this. We've already got proposals for a 2x Bitcoin ETF, a 2x inverse Bitcoin ETF. And I ask, when will the 5x Dogecoin ETF be put into a long-term portfolio? I mean, it's on its way, right, guys? I mean, come on.
So why
the
do you
leveraged
think,
ETFs? Like, I've got a problem with those too, because I mean, we have so many of these, and all they are is ways to get around, margin requirements at the brokerage house. That's pretty much why they were created. But I mean, a lot of the way they're structured here is these things both tend to, underperform. So you create the triple long and the triple short, and you think, yeah, on a day-to-day basis, they kind of track pretty well. But once you start investing, and that's the problem, is people are investing in these things, they tend to both lag. And what can end up happening is that both the triple long and the triple short end up going down. I mean, there may be no better example than Lab U and Lab D. If you look at these charts here, I mean, it's supposed to be XBI. One's supposed to be going triple long. One's supposed to be going triple short. But if you bring up the long-term chart of Lab D, the all-time high is $6,000. It's at $9. The all-time high in Lab U is $3,000. I'm trying to just grab from the chart, $3,700. It's $100. I mean, the long-term investors lost most of their money on both sides of these things. These things are just destroying money.
Right. You said it right there. Long-term, you cannot be a long-term investor and trade an inverse ETF. Those are daily trading instruments that one day in and out. Remember the VXX, which was a total disaster, right?
Yeah.
I go one further. The Bitcoin double and ETF, they don't even hold Bitcoin. If you look into the prospectus, they don't own any Bitcoin. It's just a play on it, right? So let's be real here on what we're doing. And I think, again, he opened the door up to all sorts of things that are going to be happening now. And this is a stock market. This is, like you guys were talking about before, earnings, meta, how was it prior, trailing forward. That's what we're supposed to be doing here, evaluating companies, looking to help companies raise capital. We're not gambling. If you want to go gamble, go to DraftKings, go to FanDuel, and have some fun. This is not what the stock market's for.
Yeah, and I mean, just to reiterate that point about the inverse and leveraged ETFs, is that over time, these things are not designed to go up and be, things for your long-term portfolio, even from Direction or whoever's making them. They say, look, this is for active traders looking for something day in, day out, not to hold. So if you're holding TQQQ in your long-term portfolio thinking, hey, well, 3 times return's better than 1 times return, then maybe you should consider some portfolio reallocation. Joe, why do you think, going back to the Bitcoin ETFs, why do you think Vanguard decided not to offer one when all the other kind of big money managers were doing that?
Yeah, I think they were clear in their statement. They said, hey, this is not something that we do here. This is not a product that we have. It didn't fit the goal of long-term investors. And I think they have every right to do that. I was kind of surprised at some of the reaction from even some of the media. By the way, some of the what I call cheerleading media against Vanguard, saying, oh, this isn't right. A brokerage firm can do whatever they feel like doing and offer any products that they feel like offering. They're not a government entity. You can't tell them what not to do. If they feel their clients, it's not right for their clients, it's fine. There were plenty of other brokerage firms that are jumping into this thing. So I found it almost laughable that some folks were going to say, oh, well, I'm going to move my account. I'm like, first of all, you probably don't have an account there. Who are you kidding? Let's be real. Right. But it's fine. I mean, if it doesn't meet the goal of what your firm does, for instance, our clients are very typical. I've got long-term investors. I've got, traditional money managers, pension funds as clients. I wouldn't expect a short-term hyper-focused trader to come in here and say, hey, I want to do business with you, because I probably wouldn't do business with them.
Yeah, and I mean, Vanguard, I think, actually has a track record of looking out for retail investors and, offering the lowest expense ratios and all this. And you see all kind of, like you said, in the media a lot of times, people that are kind of in the doom and gloom, zero hedge side of the world are always like, oh, look, Vanguard owns this amount of this company and this and that, like them, like they're like the big bad guy, when it's like, well, yeah, but all that money is from people, like everyday people like me, that have Vanguard ETFs that are then holding a certain percentage of Apple, etc. Well, Joe, moving on from the Fed, or from the SEC, let's get to the Fed. Getting ready to make a decision here in a couple of weeks. What do you think is going to happen with the Fed? Are they going to end up cutting rates like a lot of people have anticipated?
They will, but not yet. And the way I'm looking at this is kind of like, go back. Let's go to a football analogy, guys. Sorry to bring it up again, but say you got you got 3 timeouts left. When do you want to use those timeouts, right? If you're winning and you've got a good situation, you're probably not going to use your timeouts. So right now the Fed is winning. They're doing a good job. They're doing everything. They don't need to use the timeouts. But guess what? They got them in their pocket. So those rate cuts, they're going to come, but they're not going to come yet. So March is certainly off the table, in my opinion. I don't even think they need to move by May. It all depends on the data and what we're seeing. And so far, we're seeing a very lukewarm data, which is perfect for the setup. Now, there was a good article in the journal today about nominal versus real rates. And eventually, hey, these rates are going to have to come down because inflation is coming down to 2%. So you don't want to leave them up there too long, because it's going to be anti-growth at that point. So yeah, they will cut. And I think we've got the wild card of an election year, which is always fun as we get towards the back end, right? And as much as they say they're not political, they're political. So I would expect them mid-year to start really starting to rumble, unless we see something happen between now and then. It could be geopolitical, it could be anything where they're forcing their hand. But overall, I think the Fed's in a very good position right now, much better than where they took their medicine, right? They did it quick. They did a Volcker style, not quite as crazy as Paul Volcker did back too long ago for you, Aaron. Maybe Dennis, you remember him, but right, those rates went up there really high, and then they had a backtrack for a while, right? Because they started cutting too soon. So that what the Fed doesn't want to do is cut too soon. Why cut now? I don't. The market is holding up great. But I think what I've been watching, and I watch the dollar index. The first thing I do in the morning, as soon as I come in and say, okay, where's the dollar? And last year, tick for tick, the dollar and the stock market in an inverse relationship. It was incredible. Pull up the chart, right? This year, it's just the opposite. The dollar is up 2%. The S&P is up 2.5%, which is something that doesn't make any sense there to me. So I think somebody's getting this wrong, whether it's, the market, which the S&P, we'll see. But I think at this point, there's no need, there's no rush right now to cut rates.
Well, that's a great analogy with the timeouts in football, because like you said, something could pop up. Like, you have a big play in a football game. You could have something, happen geopolitically. You could have something break in terms of the economy and have to call those timeouts. But right now, maybe no need. All right, well, we've been on with Joe Saluzzi again from Themis Trading. Joe, thanks for hopping on with us on a Monday morning. Thanks for brightening our spirits a little bit after the tough loss last night.
It's nice to know some people are with you anyways, even in this
we're all supporting
time of grieving.
All right, guys. Have a good day.
Have a great week.
Thanks, Joe.
All right, that was Joe Saluzzi from Themis Trading. Smart guy,
Awesome.
Great guest.
He's awesome. Joe's awesome.
Shout out Joel for booking that one. But all right, guys, we've got about 7 minutes left of the show. Let me go ahead and pull my Benzinga Pro back up, see how we're trading. Looks like SPY kind of a little down pre-market. Sofi had some good follow through, up 16% now. People going out and buying Sofi after the strong report.
I think we should. Yes, with Sofi, but I think we should talk and preview at least, do a technical on some of the big guns here, because Microsoft's going to report here Tuesday. We should do a quick technical. I mean, when stocks are trading at all-time highs, it's hard to do technical analysis because there's no resistance. Sky is the limit. 407.01, you're right there at all-time highs. It looks like Microsoft, again, just owning stocks ahead of reports. I've done this for years, folks. It's a way to extract alpha, saying don't hold them through the reports, forget like Sofi, and you get confused. Don't get confused when they report. But, it happens every once in a while. But I tend to own the major companies before the reports. Why do they go up ahead of the reports? Because people are excited about the reports, because media is talking about them ahead of the reports. Multiple reasons why stocks tend to drift higher into reports. And the other thing is, if you're short the stock, you probably don't want to be short it going into the report. So, I mean, that's why stocks tend to drift up into the reports. And then it's, a coin flip, really. Do they meet expectations? Don't they meet expectations? Expectations very high here for Microsoft. So, it's going to be, but again, even if Microsoft, let's say they get hit, we've been seeing this earnings season so far is tech stocks are getting bought on dips. Besides Tesla, it's a different story. It's been out of favor here. But the ones that are, drifting higher here, Microchip warrants, they buy the dip. Texas Instruments, terrible quarter, they bought the dip, and obviously, it sold off on Friday, but, they were buying the dip originally there. Oracle's one I talked about. I did buy the Oracle dip. I'm up in that thing now, up almost 10 points in it actually now. So, I mean, even if Microsoft does dip after the report, it kind of feels like the dip's going to get bought. So I just think, it's hard to break this tech mindset right now. Maybe if escalations in the Middle East happen, there's always a wild card. You don't know. But, as of right now, it feels like tech is still in complete control and it's hard to be bearish.
Yeah, and I think, you have some definitely, I mean, this week, right, you can kind of differentiate between Microsoft, okay, more of an AI play, Apple, kind of an AI play, but not really yet. Amazon, maybe not really yet, but I'm sure Amazon will talk about, how it's going to be implementing AI in more of its services. And you also have the cloud growth from AI. So if AWS and again, same from Microsoft with Azure. So if you have that cloud growth, it could maybe help make up for any other weaknesses in the reports. But I mean, like I said, I'm a little tentative with Microsoft just because of those expectations. But at the end of the day, right, Microsoft has the strongest story when it comes to AI. So
Big story.
Even if the numbers aren't great, would I be surprised to see people coming in and buying the dip? No, because if Microsoft's down 5-10% in a day because of its earnings, long-term investors are going to look at that and say, hey, wait, I can get exposure to the leading company, the leading public company when it comes to AI right now at a 5 or 10% discount. Sure, I'll buy that. So
Yeah.
I think that's a good call, Dennis, by, even if you do see some negative numbers and a bad reaction, that you could see those buyers coming in pretty quickly. And then again, I mean, Apple, look, we have this catalyst coming with the Vision Pro. We know we have some early signs that demand is strong for it. What I think kind of a wild card for Apple could be, though, that maybe some analysts are talking about it, but most attention has been on the Vision Pro and iPhone sales as always and whatnot. But Apple has made strides in producing its own in-house chips, which can really help with its margins moving forward. That if it has computer chips, which it's already had for a while, a couple of years now, but apparently some analysts are saying that some of the chips they're making are like super strong and kind of on par with maybe some of the AMDs and NVIDIAs, maybe doing some slightly different things. But if that story ends up panning out for Apple, that it doesn't have to outsource these chips anymore and has some of those stronger chips on the market, that it could be a driver for Apple. So I'm kind of curious to see on Apple's report, do they talk about that? Do they talk about their...
And the one thing to consider with Apple is they are super secretive.
Right.
Apple has always been very secretive. So they're not one to if they've got something in the works, they don't start talking about it until they're ready to deliver. Where Musk is talking about things 4 years down the road and going to deliver. Apple's the exact opposite. They're going to sit back, quietly work on stuff, and they don't start talking about something until they're actually ready to deliver. You don't even know. The only reason we know sometimes what's working, we look at the patents filing, we look at different things because they're not coming out there. I mean, the Apple car has been talked about for, the better part of 5 or 6 years, and we know they're still working on a car. But, they're not ready to deliver it yet, so they don't talk about it. The Vision Pro is being delivered. I mean, the Vision Pro, and again, if you haven't watched that video, the 10-minute video from Apple on the Vision Pro, it's a game changer. I mean, the technology is incredible. It makes me want to own Apple, but I just don't like the big bulkiness of it, the $3,500 price tag. I mean, I think the second and third versions of this, you get this thing smaller. Like I said, if you could just have it like a pair of glasses, if you can get the Vision Pro, let's say 3-4 versions from now, 2-3 years from now, to the size of just a pair of glasses, where you have this big bulky thing like you're going scuba diving in, and on your head, I think that's going to be a lot more attractive to the majority of people. And, but you can't argue with the technology. The technology is there. I believe you're going to be in sporting events, where we're going to be able to go to the Super Bowl, AB, put on our Apple Vision Pro, and you're in the stadium. And they're selling tickets to be in the stadium, and you're surrounded, and it's going around, the crowds around you. Can you envision that? I can. And we're going there. We're going to be there soon, folks. So, I mean, it's this technology that's taking us there. So do you want to invest in this technology? Absolutely. Apple's had a tough time growing earnings for the last few years, but I do think they're going to go into another earnings growth cycle here, and it's going to be driven by the Apple Vision Pro. I'm just don't want to be early here again. It's a little bit like Tesla. Humanoids 2027, everybody, the Vision Pro is a little bit, less expensive and not as bulky, and maybe everybody's interested in it. Get that down to like $1,500, and people are like, yeah, man, this is awesome. So I do think the technology is investable. It's just, the valuations are fully valued here at 29 times earnings for Apple and 55 times earnings for Tesla. But, I believe in the technology, though.
Yeah, and just some more information. I was talking about the chips, pulled it up real quick. So Apple's been replacing its Intel chips in its computer with its own Apple Silicon chips. But now it's starting to kind of use some of its own chips in its iPhones and mobile electronics as well, and is planning to drop Broadcom chips altogether by 2025. So why this is important to me is because, think about how many iPhones Apple sells in a given year. And then now say they're using all their own in-house chips and not outsourcing some of that, and say the margins go up just, 5-10% on those iPhones with how many they sell. That's a big deal, that's just one of those things where people have been talking about for 10 years. Oh, there's no innovation in Apple anymore. There's no new products. It's how many MacBooks or iPhones can they sell? Well, this is what Apple does is it operates as, a very efficient, the biggest tech company in the world. It makes these small tweaks. Okay, now we're going to make our own chips. Boom. Now you see the margins go up and the growth is there again. So I just wouldn't bet against Apple in the long term. And again, you have this Vision Pro and other things on the horizon. So, again, I hear the criticism of Apple that it's a dying company, whatever, all this stuff, but they still do these things that as an investor, people like to hold the stock. So, all right, Dennis.
And just to clarify, the chat's saying, I do think that this Vision Pro, this first generation of this, is not the needle mover here. It's too bulky. So I've said this before. It's too bulky and it's too expensive. But, they'll get those costs down and they'll get it less bulky. And that's going to be the game changer. But the technology is awesome.
Yeah, and we've seen that with Apple too before, that, when the first iPhone came out, that wasn't really the one that took over the world, right? It wasn't, it was kind of similar, too bulky, kind of slow, hard to use. And then once they put out like the 3G one or the 3GS, that's when it kind of started to take off. So, all right, Dennis, we are running up on time.
Sure.
We'll have time tomorrow morning to touch up on a few more of these earnings before they come. Yep. But again, just to reiterate, a huge week this week in earnings. You've got Apple, Microsoft, Amazon, AMD, you name it, they're reporting this week. So make sure to stay tuned to Benzinga's Pre-Market Prep. We'll be back tomorrow, 8 a.m. to continue this earnings preview, as well as bring you your other top headlines. Smash the like if you haven't already. We will have live trading starting up in a few minutes, so do not go anywhere. This stream will redirect you there. Thank you again to Joe Saluzzi from Themis Trading, who joined us today. Till tomorrow, stay green, guys. See you then.